Hi and welcome back to another video. In this video we're going to be analysing Baidu, ticker symbol BIDU. They are a Chinese tech giant that owns an ecosystem full of products and services that include, but are not limited to, China's #1 search engine, a mapping service similar to Google Maps, a Chinese encyclopedia, an entertainment and streaming service, and an autonomous driving technology and AI intellectual property unit of the business. As you may be able to tell from their product portfolio, or at least what I've just mentioned, the majority of their revenue comes from advertising on their various platforms that they have, or their mobile ecosystem. They call this marketing services, and it makes up 62% of their revenue. Their entertainment and streaming service is a company called iQIYI. I hope I pronounced that right, but it's similar in nature to a Netflix and boasts over 479 million monthly active users. This segment of the business makes up around 27% of Baidu's revenue. But they are in the running to become China's leading AI tech and autonomous vehicle company, which would launch the business into a completely new dimension away from its legacy products. Baidu have been investing lots of time and energy and money into building out their AI segment of the business, which includes 3 core products. We've got Baidu's Duer OS, which is a virtual voice assistant that uses AI to handle and action voice queries similar to an Alexa or something like that. Baidu work with over 300 partners to install various smart devices and household products such as phones, watches, and speakers with this AI technology. Additionally, and most notably, to be honest with you, Baidu's Apollo project, which is their autonomous driving platform that supports the production of self-driving vehicles, including self-valet parking and things like that. Through Apollo, they'd already launched China's first autonomous shuttle bus, which is quite an impressive achievement, and they are pretty much sponsored by the Chinese government as the designated AI and autonomous driving provider to improve traffic flow, air pollution, and road hazards across China. And lastly, Baidu Cloud, which is focused on delivering cloud-based AI solutions to commercial customers and individuals by developing cloud infrastructure and products to help automate all areas of their business to improve productivity and operational efficiency. Here on their website, they use the example of call centers and getting rid of basically all of the team and the high cost of a call center and automating it through the use of voice technology. And they have other AI endeavors that are more in the infancy stages than these 3 areas here, such as their AI chips, which is Baidu Kunlun. That makes chips for their own AI deep learning and computing needs, but it no doubt will scale to partner with other products and third-party vendors in the future. They managed to actually raise $2 billion under the radar very recently to invest in this segment of the business, so it's definitely an area of growth for Baidu into the future. And Baidu's financials have been stagnating for a number of quarters, or had been, should I say, causing the stock to fall quite drastically over the 2-year period, as we can see is a massive dip here. But recently the stock has been in favour, mainly due to their efforts in the new AI segment of the business, but also the visibility and growth from their most recent quarter. The growth wasn't huge, but it gave investors at least the indication as to what they're looking for with Baidu, which is this new segment of the business, the AI segment of the business. And you could go as far to say the recreation of the business into a new dimension. And some thought the valuation had got too rich, with the stock shooting up to over $320 at its high. But the stock has sold off aggressively over the past month or so, seemingly due to concerns around Chinese companies being delisted from US exchanges if rules cannot be complied with the SEC. Other rumours had arisen around hedge funds having to flog huge volumes of stock in a short period too, which could be a cause, but the main cause is quite unclear, and in most cases it will probably be unjustified. After all, we are looking at a 40% drop here in just a month. And so in this video, we're going to be analysing the recent sell-off of Baidu and if it means we shouldn't invest, or what it does mean, really. We'll look at the potential for growth based off of what we know about their current product offering. We're not going to be too specific on that because it's going to be hard to put a number on it, but we're going to get an idea of how different scenarios may create value out of the stock today. And then lastly, we'll assess that valuation, plug estimates into my model, and see if Baidu stock is currently at a fair price to buy today. So firstly, if we explore why the stock had been selling off and if we should be concerned at all. And it's been selling off for about a month, as we saw, but the biggest drop was on the 25th last week. The stock actually managed to fall 13.5% in 1 day of trading, which is a really big drop. And the likely proximate cause was worry, not about the business or its operations, but around the new policies that are being introduced by the US and China's oversight of big tech companies that will aim to regulate the use of personal data. In my opinion, this doesn't warrant a 40% drop in the stock in a short period of time. Now, it may have been overcooked slightly in the valuation, so we do have to consider that, but I feel this is more noise at the moment than anything else. And here's why. So the new policy that will be introduced is under the Holding Foreign Companies Accountable Act that was established by the Trump administration and essentially means that foreign companies could potentially be delisted from the American exchanges if they do not comply with the US or SEC auditing standards for 3 consecutive years. And it was introduced after the Luckin Coffee scandal and general lack of compliance and transparency among Chinese companies listed in the US. And it aims to reduce the risk of defrauding investors like we saw in the Luckin Coffee scandal. And personally, I think companies that we follow and even Baidu will be able to comply with these rules. It's unclear what they would be hiding or even need to hide, so I don't see it as much of an issue here. Even the CEO has gone on Bloomberg recently to say that he doesn't see it as much of an issue, but he understands why people may have an opinion on it. And plus, we don't even know if Baidu are in the firing line in terms of meeting auditing requirements. Last time when the SEC come out and said about various different Chinese companies that were not disclosing what they wanted to see, it wasn't any of these big tech companies, it was some smaller Chinese telecom companies. So there's no need to be too worried at the moment, in my opinion. Of course, if you're really concerned about this but love the company, then just buy the Hong Kong Exchange security. We touch on the potential for growth for Baidu. I really just want to focus on their non-ad revenue portion of the business for now, which is the growing portion, and look at the tailwinds they will get from the AI segment of the business. And this part of the business is growing very fast, and even the CEO said they expect that in not too long a period, it will become the largest part of the business.
I believe advertising revenue accounts for about 70% of overall revenues. Non-advertising revenue is clearly increasing, as we just touched on. Yeah. At what point do you see non-advertising revenue overtaking advertising revenue? And if so, what time frame?
Yeah, it will happen. I cannot see accurately which year, but I think the trend is quite clear. For us, it's like a monopoly. We just started with an online marketing business, but as a large platform, people, hundreds of millions of people come to Baidu every day, right? Besides showing them ads, there are lots of things we can do with them. We can help them. We can charge membership fee. We can do live streaming. We can offer online games. We can have transactions, e-commerce. There are lots of ways to really monetize the traffic. We just got started on that.
What I will say, though, is Baidu's legacy products still have a lot of room to grow, especially given they provide an ecosystem for millions of users daily and can do better to monetize those users, in my opinion. You also throw into this that China currently has only 700 million plus internet users, which is, yes, double the total US population, but is only half the Chinese population. So there's only 50% internet, or around 50% internet penetration in that country, and this leaves a lot of room for growth in their core segments of the business, which provide a gateway into internet usage for everyone. So touching on the AI business, though, and its growth, we need to look at the growth in total addressable market and demand for these products and services, and how long it should take them to come into fruition and actually become a mass market product. Firstly, if we look at the digital voice assistant part of the business, which is the BIDU OS, this is a segment of the business that is pretty much, I wouldn't say going to mass market now, but is already fully operational. And going by Statista, the number of digital voice assistants was forecasted to double from 2020 to 2024, leading to 8.4 billion units sold. So you've got double in less than 4 years. It's a really high growth rate. And this, of course, complements this segment of the business for Baidu that is installing on millions of smart devices and partners with hundreds of businesses and customers. So a very strong tailwind for that portion of the business, especially if it can be a key player for China and Asia. And then if we touch on the auto or the AI auto part of the business, which is the Apollo project that they're working on, we can see that that market is set to expand rapidly as well over a longer period. So here in this Business Wire estimate, they're forecasting out to 2027, and they're estimating a compound annual growth rate for the industry of 40%, which is just huge. And this is the automotive AI market. So this is the technology, the process that goes behind the cars, not actually the manufacturing. So we're not talking about the OEMs here. This is just the portion of the business, or the portion of the industry, that Baidu will be operating in. It's more the intellectual property part of autonomous driving, which is more asset light and still is going to be a really high growth industry. Probably a better place to be than the actual manufacturing of the cars, if you ask me. And then just lastly, relating to the Baidu Cloud portion of the business. So AI Cloud is expected to grow at around a 20% compound annual growth rate for the next sort of 5 to 6 years up until 2026. Obviously, Baidu Cloud, isn't anywhere near being the biggest player in this industry. As we can see here, we all know these big names like AWS, Microsoft, Google, IBM. In China, even, the dominators of this market are the likes of Alibaba with Baba Cloud and Tencent as well. But Baidu are up there, and they're doing something that's a little bit more niche than just these cloud computing companies. They're trying to develop the AI supercomputing capabilities and infrastructure that sits behind it. So they could take a good grab of this market share. Of course, we know cloud computing or cloud services are going to be a huge market into the future. And just to round it off, in general, for the artificial intelligence business, here I've got a compound annual growth estimator that was done a little while back now, but to do with the Asia Pacific AI market and how quickly it's set to grow from 2020 to 2027. As you can see here, the estimates are that it will grow at a compound annual rate of 42% over the next 7 years, which is quite astounding. Makes a lot of sense to me. We've seen how quickly it's grown in North America and in Europe, and it's set to grow even further on from here. Asia is a little bit more underdeveloped in terms of how many people are actually and how many businesses are actually exposed to these resources that the likes of Baidu offers through their products. So I can see this growth rate coming into fruition. Now, what am I showing you here? This is all very vague. Obviously, I'm just showing you, market data or TAM data in terms of how much it's going to expand over the period. But now I want to use this in our valuation. We've looked at almost 20% of Baidu's business is in this fast growing sector, and they're backed by the government in a lot of these cases, and they have some impressive products. So we're going to take this into our valuation and see that based off the price now, in terms of how much the stock has dropped, what sort of growth rate Baidu would need to see for it to be a good investment from here. Okay, so lastly, I'll show you what all of this means for Baidu's valuation after the recent sell-off, and then also factoring in all of the products that they have and the potential growth that they should see off of those products being introduced over the next sort of 3 to 4 years. Now, and what this means for Baidu's current valuation is a 4.2% free cash flow yield, which is about as good as you're going to get, especially in this market and especially with a company that has some growth potential. When medium to long-term bond yields are lower than 1% or around 1.5%, a 4.2% trailing 12-month yield on an investment is a very attractive price. For all of you who are more familiar with PE, that's a 20 times PE, which is a good price to be getting into a stock, definitely in this market and definitely with a company that has some growth potential. Now you can see their historical results here over the past sort of 3 to 4 years. They haven't been amazing. The 4-year average growth rate here has been 13.2%, which isn't huge, but the majority of this revenue was coming from their legacy portion of the business, which we know is stagnating slightly. Now, what we're worried about, the future. So let's look at what I've done here in terms of the next 5 years for Baidu. So I've gone with a really conservative, just for demonstration at the moment, 10% growth rate in revenue over the next 5 years. And this is at a time when the total addressable market, or TAM growth rate, for Baidu is expected to grow at around 35%. So this would probably tell you that Baidu are not going to be a winner in their total addressable market, but they are going to take part. All right, so they're not going to die out and they're going to take part. I don't think this will probably play out. I think that they're a leader, especially in the AI portion of their business and the autonomous driving. I mean, they're backed by the government, which is going to help as well. And what really puts this growth rate, this 10% growth rate into perspective, because some people might think 10% is not a bad growth rate, it's not that conservative. Well, the growth rate of the Chinese economy that's going to underlie this business is 8 to 9% anyway. So it'd be the equivalent to a US company, or forecasting a US company to grow at 3.5% to 4% for the next 5 years. So just a little bit above the growth rate of the economy. That would be seen as conservative, especially for a tech company that has all of these fast-growing products as part of its portfolio. Now, I haven't done anything with margins. I've pretty much kept them all as before. And then for my terminal values, I've gone again with a conservative, what I would call conservative, free cash flow yield as the multiple of 5%, which is a good investment in any market. So here we're saying that, the market's not going to get more excited about Baidu as an investment. They're actually going to get bearish, versus now, even though this is sort of the period 2024, 2025, when their AI portion of the business should really take over and be the biggest part of the business and approach the steepest point in its growth curve. But we're saying that the market will apply a 5% free cash flow yield, which is a good investment even in a bearish environment. I've also gone with a terminal value perpetual growth rate as well, or growth method, which is a 3% perpetual growth rate. And then we're going to average out those two terminal values there, and that gives us $130 billion for the company as an enterprise value in 2025. And that's almost a 2x in just 5 years. To a share price, we're putting a target price on it of $375. And you can see, look, that price that you're paying today is gradually going down as well. So you'd be paying 13 times 2025 earnings, just based off of this quite conservative growth estimate going into the future. And show you what that presents us as our intrinsic value. Well, we've got $206 per share as the intrinsic value, or fair value, to buy Baidu stock today, based off of these forecasts here that you can see, and a 15% required rate of return. So essentially it would be telling us that if we bought the stock today, let these projections play out, and the terminal value is correct, we would get above a 15% rate of return on this investment over 5 years, which is very attractive. Now, if we get a little bit more bullish on what Baidu can do over the next 5 years, and we think that non-ad revenue portion of the business is really going to grow and grow a little bit closer to the total addressable market that they're entering into. Now, we're still not going overboard here. This is 15% as part of a 35% TAM, so we're still above half the growth rate and only just above the economic growth of the country that they're in. Then this means we've got a 25% undervalued stock in Baidu, and that the fair value today is $246 per share. And what I'm trying to show you here is, off of the latest sell-off, that 40% or 40% plus drop, there's really been some value creation in the stock now. So we've got a good margin of safety, especially if you're bullish on what Baidu can do into the future. Here I've just applied a 10 and 15% growth rate, and you can see the stock looks very much undervalued. I'll just show you, just to finish off, if we start getting more and more bullish, as you get more and more bullish, this company starts to look more and more undervalued. So really it's up to you. If you understand Baidu and the businesses that it has, then you can make a fair judgment, based off of that, how much you think the stock is undervalued today. But hopefully I've just demonstrated to you that this stock now has some potential after the 40% drop. And I'll be transparent with you, I haven't bought any Baidu stock as of yet. I'm still going to wrap my head around that AI portion of the business, take a deeper look into the legacy portions as well, and see if I can come up with a more definitive growth rate. I will say that I think they can do better than a 10% growth rate over the next 5 years, which means that, by my accounts, it will be undervalued. But I'm just going to do a little bit more work on Baidu, and I'll let you know how I get on and if I make any purchases. As always, this valuation model and an IRR for Baidu stock will be available on the Patreon or Discord. If you want to support the channel, go and check that out, and you can do some editing on this valuation model and see if you think Baidu is a good price today. If you enjoyed the video, leave a like, comment, let me know what you think of Baidu in the comments below. Subscribe to the channel if you're new and haven't already. I will see you in the next video. Good luck with all of your investments.